Entrepreneurship and wealth creation normally culminates in some form of investment. Whenever someone makes profits or business make profits, or people that just want to make more income, they think of investments. Hello and welcome to Your Wealth, the show that looks at all things money, money markets, and investments. And I'm your host, Trynos Dongo. I'm very excited this evening because we're actually joined by a man who I will call an expert in investments, or rather an investorpreneur. It is none other than Tatenda Courage Nemaungwe. He has been investing since the tender age of 18. He's been investing on the stock exchanges, several stock exchanges, for more than 18 years now. Tatenda, welcome.
Thank you so much, Trynos, for having me.
With that introduction, I feel like we're in safe hands.
Yeah.
Okay, so a lot of people simply just don't understand how the stock exchange works, how investing in shares and all that stuff works. So we're excited today to have you tell us about that. So let's really just start with the basics, and maybe you include a bit of your personal experience. What is an investorpreneur?
Okay, so an investorpreneur is a term I came up with. Generally, people know entrepreneurs who come out there with ideas, they source funds, and they start businesses. But then I then found myself in the same space, doing entrepreneurial work, but through investment. So I just blended it into investorpreneur. So what it basically means is we're coming out as entrepreneurs and investing in our personal capacities at this very stage. So that's how I came up with that term, investorpreneur. And it's been a great journey. I've been doing it from 2015 to date, and so far so good. We can't complain.
Wow.
Yeah.
So we want to get into, investing on the stock exchange. Tell us about investing on the stock exchange. Where does one start? And I'm sure you will get a bit of your personal experience with the whole thing.
Okay, so investing on the stock exchange, what you then need to do is you approach a stockbroker, because you can't go and buy shares in your personal capacity.
Right.
But in the developed world, you can do that via the artificial systems which are there. But still, you have to go via a broker. So stockbrokers do get buy orders and sell orders from customers or clients, should I say, and they execute those instructions on your behalf. Because if we are all to come and go to the stock exchange, it will be the millions of us, so we can't fit.
And some probably just making inquiries, but then
Yes,
imagine the congestion.
Yes, they will not come to execute. So stockbrokers do represent you at the stock exchange. So what you do is you approach a stockbroker of your choice, and you then pick shares which you would want to buy. Then obviously in the near future you can then sell once you've made a profit. So basically you have to approach a stockbroker. Then the stockbroker gives you that platform where you can be able to buy shares on any exchange.
And the assumption is this stockbroker will give you good advice?
So stockbrokers, their mandate is to actually execute orders on your behalf.
Oh.
Yes. Then investment advisory is a different thing. But unfortunately, you'll find that most of these investors rely on information which they get from stockbrokers, which is not bad.
Okay.
But so stockbrokers do go an extra mile to advise their clients on investments, what is going on, what are the peaks during that season, what shares to look out to, and the like. But their role, they're actually mandated to execute transactions on your behalf.
I see.
Yes.
And so I guess if they give you a bit of advice, it's a bonus, I guess, though.
It's definitely a
people.
bonus, but in my view and how I see it, there are two ways to fly. It's either you're the pilot or you're a passenger. So I always choose to be the pilot, because when
Yes.
disaster is coming, you can see it and you can take action before it happens.
Before it happens.
So we're not saying stockbrokers give bad advice or anything. That's not the case. But I'm saying if you take up the finances of your life, and you take them up. There's a sense of fulfillment in doing that when you actually do it yourself, and it's very easy actually. It's not rocket science.
Okay.
It's something you can do. Anybody who's been to school, who understands mathematics and accounting, as basic mathematics and basic accounting, has the ability to execute transactions, to actually analyze the books and go for quality stocks.
For quality stocks.
Yes. So what you're supposed to do is to come with your answer sheet. Then you compare notes with the stockbrokers. Not to
Oh yeah.
yeah.
I think that's a better one.
Yeah.
So it really brings me to my next question, where I'm thinking about who qualifies to go on the stock exchange, to invest on the stock exchange. Entrepreneurs, perhaps it can be an assumption that, okay, they already own businesses or not doing business. What about civil servants? What about just a young boy sitting at home? Is there a qualification, or anyone can invest, or is it companies, is it corporates, is it organizations?
Okay, so on the stock exchange, it's actually open to everyone as long as you've got your identification, 18 years and above. So you just need to register with a stockbroker. So if you're of the right age and you've got the income to then spend on the stock exchange, then you're welcome on the stock exchange. But before you come onto the stock exchange, there are certain things you need to understand.
Okay.
Because if you just come through, you invest because you're capable of investing, you're a civil servant, you're an employee, an entrepreneur, you're from wherever scope of life you're coming from, you're supposed to understand that on the stock exchange, there are three types of investors,
okay,
which are depicted in the form of animals. So they're bulls, they're
okay,
bears, and they're pigs.
Wow.
Okay. So the problem of coming
I didn't
onto
hear about the pigs.
yeah,
I heard about the bulls and the bears.
So the pigs generally come on the stock exchange ill-advised or randomly investing with little to no advice. They get slaughtered and you'll never see them again. So those are the pigs. So yes, you might qualify to open an account, invest and all, but you need to be knowledgeable about what you're doing. Yeah, if you're not knowledgeable, then you're obviously going to get hurt.
Okay.
Yes, so it's not gambling. I hear a lot of people saying stock exchange and gambling, move along the same way. It's a completely different thing. You
Wow.
really need to understand what you're doing when you're on the stock exchange.
Yes.
And there are certain rules, principles, and guidelines which we follow before we invest on the stock exchange.
Before you invest on the stock exchange.
If you don't do
yes,
that, you're going to pay school fees. Yeah.
You heard it. The bulls, the bears, the pigs. Which one are you? There's so much more after the break. See you then.
Loved you yesterday, love you still, always will. Through real-life stories and valuable lessons from different mature couples, we will explore with you the art of building a strong and healthy bond with your partner. Catch Sweet 16 every Sunday at 1400 hours as mature couples take us through their journey of happy and healthy relationship.
Hanzi takabva neko kumunga kuna ipwa. Zverudo izvi muzukuru ndezvevaviri uye ndezvemwoyo.
Mudiwa wangu, usandionezeka cheche.
Welcome back. This is Your Wealth, where we talk all things money, money markets, and investments with your host, Trynos Dongo. And today we are joined by an investorpreneur, Tatenda Courage. You have been investing for the past over a decade, and it's some powerful insights. Maybe we just want to pick up on the point. You told us what the pigs are. What about the bears and the bulls in terms of investment?
Oh, okay. So the bulls generally come on the market. They identify shares right at the bottom, then they buy them, and they buy them on the assumption that the price is going to go up. So these are the bulls. So what they do is they buy shares at the bottom. with an anticipation that the prices will go up. And once prices go up, they sell and they pocket their money. So those are the bulls.
Okay.
Then for you to be a good bull, you need to understand what we call valuation. So you need to understand whether a share is cheap or it's expensive. So what I basically use in my experience to identify whether prices are expensive or cheap is what we call technical analysis and fundamental analysis. So I look at the shares technically, then I look at them fundamentally, so that you get to get a value which you place on those particular shares. Okay. So I'll give you an example. If Delta Corporation is going for 20 cents per share, US cents, and you then look at it technically, its lowest price in history was probably 18 cents. It shows we're right at the bottom, close to its flow. Okay. The price flow, literal flow. So okay. If you then look at it fundamentally, the net asset value would be, for example, $1.50. So you're having a share which is right at the bottom, which costs $1.50 in terms of its book value, okay. And it's currently trading at 18 or 20 cents. Wow. So it's definitely time to buy. So if you catch it there, then you're a good bull.
Wow.
Yeah, because in the not so distant future, you're going to sell and capture your profit. So that's what bulls do. Okay. So bulls specialize on valuing companies to determine the value at which the value at which shares are supposed to be worth. Then they compare it with the price at which the shares are trading. So if it's at a discount, to put it in literal, in layman language, yes. If it's at a discount, then you buy. Wow. So these are the bulls. Then the bears. The bears, what they do is...
now obviously curious.
Okay. So what the bears do is they go onto the stock exchange. They don't own shares. Oh. They borrow shares. Okay. So once they borrow shares, they sell those shares and get, a value on the account. So for example, your Econet share is going for $1 a share. So bears do their calculation and they realize it's supposed to be 40 cents per share. So they borrow Econet shares and they sell them. Okay? So when the price goes up, the bears make a loss because in future they're supposed to buy back the shares which they borrowed.
Oh, okay.
So they make money when the prices go down.
Oh.
So those are the bears.
Now it makes sense.
Yeah.
And I think
so
it has been demystified.
Exactly. So there's a thin line between the bulls and the bears. Because today you're a bull, somersault, tomorrow you're now a bear. Yeah.
Wow. But I think it's quite insightful there. Perhaps taking me to the next question. You are invested, on the Zimbabwe Stock Exchange, Johannesburg Stock Exchange. We hear people talking about the London Stock Exchange. That's people in Zimbabwe. How do you choose which stock exchange to invest in? Now there's even the Victoria Falls Stock Exchange. So how does one choose which stock exchange, or is there such thing?
No, it's not really about choosing which stock exchange to invest on, but it's basically following companies which are ticking your boxes.
Okay.
Right. So you'll find that if I'm going for Meraf Resources, for example, in Johannesburg, South Africa, you look at its price, its book value, you look at its market price, you look at its future business prospects, you're looking at the activities they're doing on the ground. Simple things which can push you onto an exchange. For example, when I was on the JSE and investing on Meraf, okay, so we were coming out of COVID, and the ferrochrome prices shot up more than 300%. Yeah. And Meraf Resources deals with chrome. You get it. So they take chrome, then they process it into ferrochrome.
Okay.
So the international price shot up. Then you'll find that the rand was weakening against the dollar. And Meraf Resources, its revenue is offshore. So it's obviously denominated in US dollars. So
wow.
You've got local rand expenses, but you've got income which is coming in dollars. So there's an exchange rate gain just looking at that scenario.
Wow. Yes.
Then the South African government tabled a bill where they were to stop the export of raw chrome, which was supposed to be processed before export. And Meraf happens to be the biggest ferrochrome processor in the world.
My goodness.
You see?
How much more odds would you need on your side?
Then you see the management of Meraf Resources they started buying into the shares. So when they buy into shares, they have to declare because they have access to the books of accounts. So when you see the managers buying into the share, you see there's a foreign exchange gain, you see the ferrochrome price shooting up, then you see
indicators.
all these are indicators. And Meraf was trading at its lowest price in history. It was 35 cents a share, rand cents.
It
So
was
we
obviously going to now.
we
it was
bought
inevitably
in.
going to shoot.
We bought in and sold it at R1.80. So you're looking from 35 cents to R1.80. That's almost sixfold return. So
Wow.
placing $20,000, you'd reap more than $120,000.
Dare I ask on that?
Oh.
So what am I looking at? Am I looking at a dividend, or am I looking at the increase in share price? Where is my money, especially the lay investor?
Okay.
Is it waiting for a dividend if it comes, or even just increase the share price and I sell them off? Where is my money?
Okay, so on the stock exchange, you gain from a couple of aspects. The first is obviously capital gains, where you buy a share low and you sell it when it's high. Or you borrow shares, you sell them high, and you buy
Yes,
back.
I've learned
You
about
buy
that
them
one
back when they are low.
Yes.
So that's the first way of making money. Those are called capital gains.
Okay.
Then the second way of making money is through dividends, where dividends, a company operates for, usually they're issued out every 6 months to 1 year. Some they issue quarterly. It depends which kind of a company you're dealing with. So dividends, the company makes a profit, which is what we call earnings, and then they issue out a dividend to each and every shareholder at the existing book. So you're going to benefit from part of that profit. Then the other way you benefit is through rights issue. Rights issue is where a share is trading, for example, at $30 a share. Then the company wants to raise more money. Then they offer existing shareholders the same shares at maybe $15 a share.
Okay.
So by participating on your rights, immediately you've benefited.
You've benefited.
Yeah.
I think
So then there are bonus issues. So yeah, those are the way you
some
can
solid
benefit.
insights there. As you can see, the momentum is just now unstoppable. Don't go anywhere. After the break, we'll pick it up from there. Welcome back to the third and final segment. This is Your Wealth with your host Trynos, and we look at all things money, money market, and investments. And today we are on the dollar. We are talking about investments literally on the stock exchange. Okay, there's so much to talk about it, and I think let's see how much we can cover. We have talked about the dividend and the capital gain and a lot of other aspects. I want to take your attention to qualifications that might be conducive maybe for you to be a bit savvy. I liked the idea you talked about, okay, you can even start with the brokers, but you can take care of your money. Is there an advantage, or is there programs? Is it a business management student? Is it an economics graduate, or even a medicine person who has an advantage in terms of understanding these things?
There's literally no advantage on understanding, because you see the advantage of the stock exchange is that we deal with publicly available information. The moment that information is not public, it becomes insider trading. So what happens is, if you need any financials, they're there on the websites of companies, on the investor platform. So it doesn't matter which area of life you're coming from or which industry you're coming from, but you need to understand accounting.
Oh, okay.
Yes, so you need to understand how to do your financials. You need to be mathematical, because we're talking figures here, we're talking money. So it's best to understand the books of accounts. It's best to understand, basic understanding of mathematics. Then that way you have the same platform as any other investor on the stock exchange. Then thereafter, you then use the accounting, background and the mathematics to then, go into figures. You then calculate. You also need. It's not only qualifications which matter on investing on the stock exchange. You need to look at the political environment. Politics plays a major role in terms of the outcome of activity on the stock exchange. For example, right now in Zimbabwe, we are approaching the harmonized elections. So you find that activity on the stock exchange is very limited. Everybody has adopted the wait-and-see approach. Yeah. So for that reason, politics plays a major role. The economic environment plays a major role. Inflation, interest rates. You should understand that interest rates have an inverse relationship with the performance of the stock exchange. So if the interest rates are going up, you'll find that the stock market starts suffering because people will then remove their capital from the equities and go to the money markets. You get it. So you look at the economic environment, the technological environment, even the religious environment. It works. You can't start off investing in a company which sells meat products, selling pork in the Arab world. You're going to fail. So even the religious aspect of it works. Yeah. So the technological aspect of it works as well. So you need to understand that a share price is not only what you figure out from the financials. There are a lot of aspects beyond the financials which then shape the share price. You can look at future business prospects. A company might win a tender to supply, SpaceX with, byproducts which they use for their, space activity. That way the share price can rocket up.
It's almost inevitable
Yes.
that share price is going to shoot.
Yes, if Warren Buffett just comes through and says, okay, tomorrow I'm going to buy Telcom, or tomorrow I'm going to buy, Econet, the share price is going to shoot up. Though the financials are not reflecting anything, the fact that an authority has just said, no, I'm going to go after this share.
Wow.
So there are a lot of aspects.
Coming from the oracle of Warren Buffett.
Yeah.
That's how much power he wields. So
Exactly.
we are saying someone's word changes share price. A presidential announcement can rip share price apart.
That's very correct.
Or can build it
I've
overnight.
got so many practical examples where politicians meddle doing their business and it affects the stock exchange negatively and positively.
And I can see that aspect of perception and anticipation almost just as volatile as a currency or prices on the market. It's so interesting, I think, as we go on risk element. I want to talk about that, but in a specific way. Every business, there's risk, whether in farming, in this case investing, any form of entrepreneurship, right? What are the best gains and losses? That's why I'm talking about the losses you've seen on the stock exchange as you practically invested.
Okay, so the best gain, we've just spoken of politics.
Yes.
And that one, it came out of a political situation here in Zimbabwe where in 2008, we saw the global political agreement being signed, which gave birth to the Government of National Unity.
Yes.
So during that time, I was just finishing my second year at university, going into my third year on attachment. So there is CFI. CFI, it was trading at 1 cent per share. This is US cents, 1 cent per share. Then by the time the GNU opened up, the valves of the economy opened up, currency was coming in, economic activity boomed. It moved from 1 cent to $1.10. So what we're saying is whoever put in $10,000, whoever put in $10,000 yielded $1.1 million by 2013. This is the best gain I've seen.
1,000%.
Percentage-wise, it's more than 1,000%. It's gigantic,
Goodness.
Yeah. So you're looking at from 1 cent to $1.10. So when that happens, it's not just prices moving. It's lives changing.
You're a millionaire.
it's lives changing. You can easily become a millionaire
from 10K.
From $10,000.
That's the best return on investment I have. What a capital gain.
Yes. So it happens on the stock exchange. Yes, in the blink of an eye, it does happen. But so that's the best gain I've seen. Yes. Then the worst movement of share prices I saw was Rio Tinto Zimbabwe. It was trading at $6. Then the issues started happening. Management issues. The gold became so expensive to extract, etc., etc. It moved from $6 a share to 7 cents a share.
You're kidding me.
I'm
that's
telling
that's
you.
worse than the CFI. That's worse than
That-
the
that-
CFI gain.
Exactly. I'm happy you're following. This also shows you that shares fall faster than they rise.
My goodness.
Why? Because people panic.
Okay.
When there is a bear run and shares start falling, the basic mindset or the default mindset of any human being is, let me sell and capture something
Wow.
before my money turns into trash.
And
So the more we are running to sell the particular share, the price just drops like
just
a rock.
drops like. And do you know
Yes.
why I'm panicking now?
Uh,
Time. So you know what? Definitely, I'm going to propose for a part 2. Clearly, the producer can see me because there's a lot of things we've left out, but I think it's so insightful for Zimbabweans out there. So maybe, Tatenda,
Yeah.
in 30 or 20 seconds, what would be your last words to the viewers, the investors, aspiring people who want to create more income?
Okay, so on the stock exchange, please bring a surplus. What we mean by surplus is excess of income over expenses. Do not bring money with pressure. Money for rent, money for a wedding, money for Ebola, money for, to pay tax in the future. Then you bring it to the market
Yes.
because it might turn into trash.
Okay.
Yeah. So it's a perception game, and at times, you see, the stock exchange falls rock bottom, not because you've made a bad investment, but because of probably situations at hand.
That would be
So
there,
do not
yes.
invest on the stock exchange with money, being followed by pressure.
Yes.
Then the second thing, for the stock exchange to work perfectly well, you should have a business or income supporting the stock exchange. What I mean is when you buy a share at $1, it falls to 50 cents. You haven't made a loss up until you dispose or you sell.
Okay.
So what you do is you put in again the same amount of money you put in the first stage.
Yes.
You benefit quantity-wise.
Okay.
Then it drops from 50 cents to 10 cents. Again, you put more money.
Yes.
You benefit quantity-wise because if it's $1,000 at $1 a share, you get 1,000 shares. If it's now at 50 cents, you're getting 2,000 shares. If it's now 10 cents, you're getting 10,000 shares.
Oh.
So at the end of the day, you add up all the shares you got with the amount of money you put in, you have an average price. So for the stock exchange to work wonders, make sure it's being supported by active business. So you also need to be very entrepreneurial so that you get that money which can support your dream on the stock exchange.
There you have it. We were talking about investing on the stock exchange, and there's a lot to look out for. A lot we actually left out. I hope we definitely get a part 2 of this conversation because there's so much more insights that we could have from Tatenda. Thank you very much for joining us.
Thank you,
Myself, Trynos Dongo, your host, and the crew behind the scenes. It's a good night.